Hello, investor and trader. Welcome back to an episode. Are you guys enjoying this little dip pullback? I sure did. I wish it could continue to fall, man. But who knows, right? The market is very unpredictable right now. Options premium is hella attractive. That's why you need to get that cash on the sideline, right, to sell some puts. But options are very nice today. But before I get started, I'd like to disclaim that I'm not a financial advisor or a stock guru. I'm just a random guy on YouTube, love to trade stock and invest in the stock market. So let's just talk about what happened today. So during this morning, the Dow was down almost, well, over 1,000 points. So I began to text my little sister. I'm going to use my sister as an example. I hope she doesn't mind. Well, I'll block her information now, so I have several sisters, so we don't know which one, right? But for those in my family, you know which one I'm talking about. So I text her this morning, 8:50, almost 9 o'clock, when the Dow, the Nasdaq was down heavy. I said, close your eyes. Do not look at your account. It is about to get ugly. Ha ha ha. And then she said, are you serious? How much did I lose? I just said, not much. Just down a bit. She down like thousands. The markets sound like we are in a recession. But hey, who knows? We are probably in a recession, right? I wouldn't be surprised. And then she said, like thousands? OMG, I hope it's not going to be lower than that. I don't want to lose any more money. Her account is not doing so good, but it's okay. It's under control. I help her manage through this hard time. Now let's go to the second post. The continuation to the conversation this morning. So 9:39. She said, "I don't want to lose all of my hard-earned money to disappear by the time I am able to buy and sell again. 3 months is a long time to wait. I tell her to wait 3 months. Now, that's another thing. Sorry, that's another thing I want to talk about. Patience. You need to have patience. You don't just buy any dip buy, right? Then I said, no, best is to hold. And then I said, and deposit more money to buy stocks. Stocks are on discount. Now, not all stocks are created equal, okay? So we're going to talk about some, before I get to more individual stocks, I'd like to talk about just a little bit of the index, okay? So here's the Nasdaq, right? Here's the stock right here. Let's go to 3 months so you can see a better picture of what's going on. So you see how it fall and it bounce and it fall? This is right here is a dead cat bounce, right? Or a bull trap because it continued to the downside. But notice this candle over here. This candle and this candle and this candle. Notice it's getting bigger and bigger and bigger, right? More volume. You can see the volume down here is increasing. And then suddenly today it just mass panic sell. But guess what happened? At some point right here you can see, right? This is a 30-minute chart, 30-minute and 1 hour. And then it just bounced. Red to green, both the same size on the hour chart, right? This is a high sign of reversal, and it did. Now it hit resistance again. So people are buying the dip. Now this morning I was watching some YouTubers just to see what did they react or what video they post, you know what I mean? Because this morning was hella funny. Some YouTuber already sell out. I thought the name of the game is buy low, sell high, right? Why are you selling out? I can see why they sell out. But they probably invest in a highly speculative stock that keep on falling with no bottom, right? It keep going. One of that stock is right here. Now I'm gonna go to the individual stock. Is Robinhood, right? Kathy Wood's stock. Remember Kathy Wood stepped in right here, and the next thing you know, it went parabolic. Now this is where most people will buy or very exciting for most traders or investors right here. But now it's not so fun, right? It went from 70, 80 bucks down to 13, which is like a total crash. All right, back to the index. I still have some more stuff to say. So is this the bottom? Well, we don't know, right? I wish I know. I wish I was that psychic, but I can tell you this. If we zoom out again, now remember, this is the weekly chart. See how, if you watched my last video, I did mention about back here, right? When I first started, make one of my account public on my Instagram. It's right here in August. Here's the date. Remember I made that post, and then boom, the tank. Let me zoom out a little bit. This is a little too far. But history tends to repeat itself for the stock market, okay? Notice something right here. Let's go back to this time frame. Notice how the Nasdaq likes to move above this white moving average. This is the weekly 6th EMA. Weekly chart, weekly, not daily, weekly. On the 6th EMA, see that white line right there? Once in a while, it hits this blue line right here, right? See how it hit the blue? Which is the 20 EMA. Now, once every other month or few months, it breaks below that and retouch this green line, which is the 50 monthly weekly EMA. Sorry, weekly EMA. Okay, weekly. Sorry, weekly. Here's the 50 right here. Now, very once in a while, we may touch this yellow line. As you get the idea, right? Once in a while, it pullback, a deeper pullback, known as a correction. Okay, so we almost tapped this red line right here. You see, back into early 2016. I remember here, I bought Google heavy. When Google back then was $600 per share, it tanked all the way down to 500 something. I was like, what the hell is going on? Woo! But glad I hold because it's Google, right? It's Google. It's not like Teladoc. Just joking. Okay, and then this happened right here. Remember this right here? The government shut down, so on, so on. It pulled back pretty good, right? Notice something. It's almost touched the red line again. You see, it touched the yellow line, which is the 150. See, and then of course the infamous coronavirus artificial crash right here, right? The point I'm trying to say is, guys, once in a while, the Nasdaq will pull back to these levels. So why are they freaking out? They should be happy, you know? We didn't even tap this yet. We barely tap it, you know? Just look at that. It's still like several dollars away. So could this be a little fake bounce and then more to the downside? Absolutely. If that happened, what's gonna happen? Buy the dip, right? I sure gonna buy the dip, but again, not all stock are created equal. I hope you understand that. Of course, ultimately down to here. From here down to here, it's a pretty good correction. It's over 30%. That'd be awesome if that happened. But who knows? Maybe even fall down to here because sometime it could fall below that support line or the moving average down to here. Because after it breaks this right here, the next support is right here, obviously, right? Around 9,000, 9.5, 10,000, somewhere around there. From here to here, that's like quite a big correction. It can happen. I'm not saying it will, but it could happen. We have to be prepared for that. Now let's zoom out again to the monthly chart, okay? Monthly chart. We didn't even touch this yet. Well, we did. Yeah, we did this morning because I remember it was like 13,100. So we did tap this blue line. It just fidelity a little bit slow. Just give it time. It tapped it, but then it could hit here, like I said in my last video. It could, see right here, around 10,007. It could. Worst case scenario, I think it could go down even down to here. Remember, these are the levels we want to buy, right? When a pullback on good, solid, strong, fundamental company, not highly speculative, because those are like Robinhood, where it just keep on going. I don't know where the bottom is. It could be $10. It could be $8, $7, $5, $2. Who knows how low it'll go? Because now it break all the previous support. The main one was right here, but it already broken. So I don't know how low it would go. To be honest with you guys, because I'm not making fun of Robinhood shareholder. I'm just saying this stock has been beaten down quite a bit. Now this is the stock you want to avoid catching a falling knife because it just keep on falling. You see, once it broke this key level over here on 32. All right, so let's talk about some of the stock. Now, Square. Remember Square? On my last video, I said 100, the next key level. Look at that. It hit 102. I was $2 away. But then it bounced, right? So who knows? Maybe it could be another trap. As you can see, back in November, this white moving average right here, which is the 6th daily EMA right here, has been acting as a heavy rejected. It can't push above it, right? So now 125 is the next key level of rejection or resistance. And then, of course, it try to hit 142, right? Because this is going to move along as time goes on. So now is it time to buy Square? Well, I wouldn't buy Square right now because on a higher time frame, like the weekly, the monthly, especially the monthly, is still sloping down. So be very patient. Just like I said to my little sister, be patient and wait and wait and wait. Can you imagine if you just don't buy Square all these time? Now you finally decide to buy at 100. Isn't that buying at 100 much better than buying at 150 or 200 or even 240 or somewhere up here? Like most people are catching the knife like right here, right? Because this is a falling knife, you see, on the monthly chart. All right, next stock, Tesla. Tesla is still holding up pretty good, believe it or not. It's still holding up pretty good. The bubble for EV has not popped yet. So, yeah. Just barely touched the 200 moving average. It's still, I guess, a bounce. So Tesla again is still holding up pretty good. Can it go lower? Absolutely. The bubble had not popped yet. Other bubble already popped. Spec stock already popped. Another one. Let's see. Neo. Same thing. Neo and Tesla almost similar. Neo finally break below 30, right? The key level is right here. If we zoom out, a little bit too far. There we go. Draw some line. Very simple to do. This was the key level right here, which broken, act as a resistance, now pull back down. So where are the next key level? There's a gap right here. You guys see that? There's a gap right there. It's not even filled. It's almost filled. Almost filled. So 2021, I can see that coming very, very soon because earning is coming up. If they miss earning, whoo, this thing can go even lower. So if this breaks, just draw some line. It's very easy. Not hard to do. Just basic observation. Next level is right here, right? 15, 16 right here. And then some more right here and so on. It just keep on going to it could go low as it wants. Or it could bounce as high as it wants too. But the high is very easy to find. Just the low is kind of hard to project. Look at these gaps right here. Let me zoom in right here a little bit. Remember, most gaps tend to get filled over time. We just don't know when, but it is there. So let me zoom in right here. I see two gaps right here. Yep, right there. You see? $7, $8. Woo, that's not good. So yeah, Neo could potentially go down there if the EV bubble decide to pop. So I would not be surprised. But anyway, so that's like far away from now. But who knows, right? Because look at Netflix. Netflix barely missed the numbers and they take over 20%. So right now, this one right here, 21. Next one is 15, 16. So that's the kilo to watch for Neo. PayPal. I start a position on PayPal around 200. Right now it's at 160. Still too close to my first initial entry. I'm down like 20% ish. I don't care. Small position for me, not a big one. But I like to buy more if they drop down to 100 or more below. Somewhere down here. Very simple to follow. Let's go to the weekly. There we go. We can draw some lines. So where would I buy some more PayPal? Well, I would like to buy some more right here around 120. You see right there, resistance, finally break out. So I think 120 would be a nice one to buy if it breaks that low. I think it could. It's only a couple tens of dollars away, like 40 bucks, 30 bucks away ish. So it can happen. Remember, earning is coming up. If these companies miss the numbers, oh yeah, we can see it coming. I mean, to the downside. Zoom. This stock is not my favorite, but it's getting pretty attractive. So 100 maybe. Let me go to the monthly, see what we can find. Oh yeah, the monthly is still going down. So let's go to the weekly. Next key level. Let me draw some line. This is very easy to do. It's not that hard. Just find a bunch of price that keep bouncing. I think 110 or 100 would be a good one. See how it right there, reject it, pop above. Yep, I can see it coming. 110 is only $40 away. If Zoom missed number again, you're gonna tank. So 110 will be a good price to watch, but we have to see when it gets there, is it gonna bounce or not. What's another one we can find? T-Doc. 72 right now, 75. Very simple to do. Same thing. Draw some lines. So already hits that and breaks below. Now going to act as resistance now around 80. How low can this thing go? Well, the next one I see here, I see is right here. A lot of around 60 right here. A lot of price action right here. 60 or even 50s. Yeah, I would say 60. It's almost there. It's only a couple dollars away. Yeah, 656, mid 50s. I can see it happening. You just have to be patient and wait. On the monthly chart, look how bearish it look. Starting from this candle. Now look at all these candles right here, okay? Which one is the biggest candle? Obviously this red one, right? Compared to all these candles. What that tells you, this is a good signal. Hey man, I'm getting the F out of here because it's gonna back down. How low can it go? Well, we just saw on the weekly. Let's draw the monthly. Much easier to see. It could probably go down to here, potential. All the price action right here, you see, before COVID. So it can happen. So that's T-Doc. Next one, Pinterest. Oh yeah, look at this stock. Still going down. It was 27 at one point today. Okay, not bad. This can definitely go a little bit lower, I mean. Just draw some line again. Next one is right here, 25, not yet, but almost there, only a couple dollars away. Again, if it missed the numbers, a missed earning coming up, oh yeah, I can see it coming. After that breaks, I think the next one's right here, around the 18 or 20. So that's Pinterest right there. Now the infamous, this one. Very exciting right here for most traders and investors. So when it was around 60, 170, all the way to 180 at one point. Notice the volume here is crazy. But now it's breaking down. Isn't an IPO price like around 75 or 80, something like that? So now it's 60. This company is funny. It's worth tens of billions of dollars, but they don't have any revenue near that evaluation. So that tells me this stock can go much lower, just like Robinhood. So be very patient with this one. I mean, I don't think this is the bottom. I think it could go much lower. Okay, so which stock did I buy today? I did buy some stock today, so I want to share with you guys. So Facebook, again, Facebook. As Facebook fall and fall and fall, I begin to dollar cost averaging across all of my account. Investment account, retirement account, trading account, swing trading account, any account I get my hands on, I'll begin to nibble some shares. So now I'm up on some of them. I bought some 295. Remember, you watched my other video. I did have cash secure put on Amazon, which are over 135,000. It's a six-figure position. I agreed to buy at 130, but I collected over $15 premium. So pretty much that position on my average cost around 315, 316 ish, But it doesn't expire to another 2 months, so I have plenty of time to hold on. I hope it goes lower. I'm okay if it takes all the way down to 250. I'm gonna buy it as it goes down because Facebook is a cash printing company. Another stock I've been buying is Amazon. I'm gonna buy around 3,300. I bought some at 3,300. I bought some at 3,100. I bought some at 2,800, and then today I bought some at 2,700. So I'm down like a couple percent down, 10, 15% down. No, 10 to 12% of our last recall. So I'm down on Amazon, but I'm very happy because I get to buy this on a discount. Overall, still again, it's a strong fundamental company. Amazon need no introduction. Another company I've been buying is ALGN, Align Technology. They make clear braces for people. So I'm gonna buy this today. Actually, I bought some last week around the low 500. Now I'm gonna buy the mid 400s. So I bought some of that today. I'll share all these later on when I show you guys my main account on a future video of what stock I am buying during this sell-off. Because remember, I like to buy stock when it's on discount. I do not like to buy stock on a run-up. That's not how I buy or how I invest. The goal is buy low, sell high, right? Not buy high, sell higher. That's called chasing, or you want to call it momentum trading. It's up to you guys. MED, very strong fundamental company. Again, I just bought some today around 195. I began buying this around 200, so now I buy a little bit more. I think it's cheap. So what's the difference between strong company and weak company? Well, it's all comes down with this kind of chart. Again, this is just chart, okay? You can see the number, but I like to show chart. It's much easier to see and comprehend what is the uptrend, what is the downtrend. Now, these are the stuff that I look for. Again, I just probably repeating myself. I got this from Guru Focus. I think it's called Guru Focus. It's one of the value investing website. Okay, so let's check out this one. This is for MED, M-E-D. Yeah, MED. Check out all these years. Revenue is kind of stagnant right here, but it's picking up. So that's good. Let's check. See the earning. Remember, revenue matters, but they have to earn money while revenue increase, right? I don't want revenue increase mean they don't make no net income, right? I want income. So it's green, so it's good. Check out the debt to cash ratio. Very, very attractive, you see? Barely any debt. Check out the operating cash flow, free cash flow, net income, dividend. See that? Very, very attractive. It's going up. Dividend also increasing. That's very good. And ROIC, return on equity, return on investment, stuff like that. Look at that. Very, very attractive. Phenomenal company, fundamentally. Let's show you guys another example that I can find. Facebook. Same thing. Revenue increasing over the years. Not only that, they also make out money. They also make money, right? Net income increasing. Check out the debt to cash ratio. Oh my gosh. So attractive. Check out to operation cash flow, free cash flow, net income, and of course no dividends, so it doesn't count. But check all these, all increasing. And of course, return equity. So it's all good. Very, very solid company. Now, last example. I think you guys got the idea what company I'm looking for when it comes to investing, right? Last one, ALGN. Now, again, I began to buy this around 500 and 400. Now, this company, you can argue that it kind of expensive, though this stock always been trading as a premium, just like Visa, just like Adobe. Those always trade expensive. But look at the fundamental. Look at that revenue. Oh, so nice. Look at the net income. Woo, sexy, right? Look at that debt to cash ratio, like almost no debt. A company cannot go bankrupt when it has no debt. It's kind of common sense, right? And check out the operating cash flow, free cash flow, all increasing. These kind of company I like to buy. Now, direct competition to this is Smile Direct. Have you saw Smile Direct chart for the past 10 years or 5 years? It's not that attractive at all. Let me show you what I mean. And I don't know why YouTubers keep buying things for it. Now it's like, what, below $2 or near $2? Now, I'm not picking on Smile Direct Club. If you invest in this company, good luck to you. But for me, it's not a buy at all. But it's fun to see. I want to see when's the massive short squeeze going to happen. They've been saying that since last summer. So far, nothing happened. But we will see. Who knows, right? It could squeeze over to who knows how high. But yeah, this stock since IPO, right? Is this max right here? Yep, since IPO, it just kept going down, 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 from $21 down to $2. Wow, that's crazy. Now look at the monthly chart. What do we see here? Isn't this a lower high and lower low, right? A bunch of lower high and lower low. So what's the point of catching this for? There's no point. This is like a dead cat bounce, you know? But stocks like a very fundamental, like Facebook, look at all these dead cat, not dead cat. Look at all these micro pullback, bounce, pullback, bounce, pullback, bounce, right? You get the picture. So I'll be happy to buy Facebook if it hits a 240. Why 240? Well, look at this. It hits here and it hits here. So therefore, it can hit here again in the future. If that happens, I am ready. Ultimately, if it hits here, if it pull back that much, dude, this is like a bargain. By the time Facebook hit here, I think the PE ratio probably like 16, 17, which is pretty crazy if you think about it, because Facebook growth is still double digits. Anyway, so that's just the fundamental I'm looking for, how I catch a falling knife. Remember, you want to catch a bouncing rubber ball. Do not catch dead cat bounce. Be very careful. There's a totally different thing. They're not the same. If you catch dead cat bounce, you're just going to get burned and burned and burned. But rubber ball, it bounce. No doubt. Just give it some time. Strong fundamental company always win. All right. See you guys in the next episode. Bye. And good luck on your investments.